Hey everyone, good afternoon. Good to see you guys. Hope you had an awesome day. Well, the market did not do much. That's what we were expecting, basically. Continued chop sideways. And basically, we just chopped sideways. There wasn't really all that much action today. Not really expecting much action. We did get a little bit of a possible catalyst this morning with the revision of the labor report, but the market just completely shrugged that off. It was kind of amazing to see how little the market actually cared about that. It came out around 7:07 my time, so 10:07 Eastern time. And that's when we got this little uptick upwards, and then we started going downwards, and then we moved up from there. You can see that volatility did pick up a little bit, realized volatility that is, did pick up a little bit immediately during and after that report, but then it just, market really did not care about it, which is really, really interesting because that should not be good news at all. And while it does support rate cuts in September. So, I mean, could we say that the market eventually went up because of that? I wouldn't really be able to draw a correlation between the two simply because it took so long and there wasn't really that big of an initial reaction to it. So we can't really say that that was the catalyst for us moving higher. And really, we didn't move all that much higher. We just kind of floated upwards back to 650. And as we've seen, 650 has been really sticky. It does look like the market moved up post-market, but we'll see. I think yesterday, post-market and pre-market, the market did the same thing. Let me see if I can get that. Where are we? Okay. Yeah, so yesterday, post-market, we went higher. And then pre-market, we were higher. Then we traded down to eventually close or open a little bit higher. But I mean, again, really, it was not that significant. So just because we're higher post-market is not necessarily a clear indication that the market is going to head higher. However, if it does, if we do open up over here, that is going to be challenging the all-time highs over here. So we'll see. We'll see. I don't know that tomorrow there's a large enough catalyst, but it's interesting to see that the market continued its movement post-market. So what I will want to see is it open near those levels, and then we can consider that possibly we're going to start our drift upwards if that's actually what happens. Let me see if I can finally get SPY on Gamma software up. I'll start that process and see if it loads up. So chop. Today, 0 DTE. We took a look at our gamma levels, and I said, oh, this was right before the report. And you know what? I didn't update anyone because basically nothing happened after that report. So we can see concentration at that 650 level, that 6500 to 6510 level on SPX. That proved to be a strong level, but it was not a pin. There wasn't strong signs of pinning like there may have been last Friday. It's looked pretty similar to yesterday, actually. And yesterday we closed closer to 648. And then, or was it where did we close yesterday? 648.83, so close to 649. But today, it did end up staying right there. But I wouldn't call that a pin simply because it didn't get there till the very end of the session. So all day we spent below it and then slowly trading up towards it. So it acted as a magnet all day long. It just so happened that we closed there. And so it finally got there by the end of the market. So that's not really what we would call a pin. Pin was it goes there and it stays there. And it didn't get a chance to do that. It just hit that target finally towards the end of the session. And we did close right above it at 650.33. So that was a really good level. Now, to take advantage of that today, because I wasn't confident on a pin at 650, I went for a range. And it was instead of a butterfly today, I did a condor because I wasn't confident in that 650 level. And this is the condor I ended up doing. I did it on XSP. The reason why I did it on XSP is because if I just let it expire, it doesn't count against it as a day trade. So I received 25 cents credit on it. As long as it stayed between, XSP stayed between 648 and 653, I would collect that full credit, which would be 33.33%. And you can see those are my boundaries right there, 648, 652. Did I say 652 or 653? 652. 652 is the correct number. I think I might have said 653. But you can see I drew the lines right there, just so I know. And we never reached those. So we did close in between these two levels. So we did make 33.33% on that. So 0 DTE gamma levels definitely helping us today. So let me see if I can get the gamma. Oh, there we go. Popped up. Okay. So we'll do this. I'll show you what it'll look like 0 DTE in just a moment. But this is the overall picture for the SPY right now. And what this is showing me is that there is some strikes, there is interest, and there's growing interest above the 650 level. This is 650 right here. There's 652.5. There's 655. There's 660. This might be a little bit cleaner. I can't zoom in on that though. So let's zoom in just to get some separation here. And you can see that 650, we are now a little bit past 650. And this is showing me after hours data. Yeah, this is showing me after hours data. So it does appear that after hours, we are pretty close to that 652. And if we can get through that, then 655 becomes possible, especially if we start seeing that gamma growing. And 660 up here is not too far away. So there is interest, and you see very few red bars down here. So there is a lot of interest in the SPY going higher. So right now, in the shorter term, it does look like we could go higher to 655, 660. That's what gamma is telling us at least. I don't know that we have the catalyst to get there this week, but maybe PPI, CPI, all the things that we looked at yesterday, maybe they prove strong enough and we do move higher. But again, it's probably not going to go screaming higher. It would just be just a drift higher, kind of like this, a little bit of drift higher. And then we could get a little bit of a pullback and then drift higher, pullback. That's really the pattern that we're seeing right now, as opposed to the box that I was looking at a little bit earlier. That box still holds for now until it gets broken. So we drew this box, or if we wanted the smaller box, this would be the box. We've been in it for a while. If this continues to drift higher, and you can see that post-market level at 51.62 is still inside this box. So we would need tomorrow for it to open high and just keep on drifting higher and drift outside of the box. And then we could say, okay, those gamma levels will probably start getting into play. And then 655, 660 then becomes the target, or the short-term target for S&P 500. Hey, C. Fazio, hey, Tim, James, Cosmic Spiral, Kevin, Peter, good to see you guys. So let's see what that would look like in the Gamma software. Hopefully this will load. The developers are still cleaning up a few things, so they're still working a lot on the background, which means that sometimes the software slows down. So I can do tomorrow expiration. Right? So the dates are off by a little bit because the developers are in Europe, so their expirations are a little ahead of time, but that'll get corrected as well. So if I load that, so this is tomorrow, what tomorrow's picture looks like. So only tomorrow, only September 10th. So if I zoom in here, then I start to look at that separation. So we're not really expecting to get to 660 tomorrow, right? That'd be crazy, crazy huge movement. So it's good to see that the GEX structure is supporting that. The GEX was really looking at 650 is still the strongest, but that's now going to act as support. Now that we've broken through there, that 650 is going to act as support. So that we have a pretty strong support right there. We've got a max pain level right there. That means that the market maker is going to have to defend that level pretty hard. So again, 650 is a very strong support level. So I'd be surprised. Really, it would take a lot of something pretty big for us to break significantly below 650 tomorrow. And then we've got this 652 that is almost the same concentration as 653. Those two are very similar levels. And then we've got 655. So tomorrow, at least so far, at least where we're positioned as of end of day today, it does look like this market could go higher. And then tomorrow morning, of course, we'll have to see the 0 DTE picture in order to get a real good idea. But for now, we can positively expect that unless something weird and crazy happens overnight and there's some strange overnight news, then we can probably expect a bullish day tomorrow. But I wouldn't go there's so many other factors between now and tomorrow morning that could change that picture. And GEX cannot update overnight so you're not going to see that picture and change until the morning session opens. So we would have to look at all our normal things and not gamma until after the morning session opens. So all of the things like the economic news, potential catalysts in the morning, momentum, sectors, all of this are still going to be relevant. GEX doesn't overwrite that. It works in conjunction with all of that stuff. Okay, so that's pretty exciting. I'm excited to get that started. Hopefully we'll get to be able to launch that very, very soon. I think this weekend actually is the plan. So I'm excited to show you guys what we can do with this. Now, let's take a look. If we are going to drift higher, we want to know which sectors are leading and where money is being put to work that is causing all of this to move upwards. So we're going to run through all of the major indices. We're going to look at the equal weighted indices. And then from there, we can break it down into sectors. So SPY approaching all-time highs again. Let's look at the equal weighted. Equal weighted, okay, not as good, but pretty close, like not super far off. We're not seeing big divergence like we were a couple of weeks ago, 2-3 weeks ago over here. So these two are matching. So that's a sign of a healthy market. QQQ approaching all-time highs as well. So QQQ has now caught up with the SPY. So that means large tech, hopefully, is also caught up to MAGs. We'll see in just a moment. QQQE, equal weighted QQQ is not looking that good. It's still under its MA50. It's trying to test it right now, trying to break through there, but it still has a ways to go. So that tells me that the MAGs are still in control, at least of the QQQ. So we need to have a little bit more balance over there in order for us to be really confident that the SPY can move significantly higher, or QQQ can move significantly higher. They can drift upwards, but how high can they really go without the participation of the majority of the market, the majority of the participants in the market? 7 companies can't drag up the entire market forever. So we'll want to look very carefully at that. IWM, nice movement upward recently, very strong. And then let's take a look at ARKK. Sideways choppy movement. It did have a nice run upwards, and then it's a little struggling a little bit. But so this is a great example of what I want to see in the S&P 500. So last week, someone asked me, what do you want to see? Like what will give you a sense of the market topping? I said that MA50 comes up and it matches the EMA 8 and EMA 20. They're traveling sideways and we keep crossing back and forth over and over. That is a sign of consolidation that could break to the downside, but it could also break to the upside. But if it breaks to the downside, then we start to get a little skittish, right? We'll have to start considering protecting ourselves, especially because that MA90 this one's a 90, MA90 is and the MA200 are not that far away. So if it starts to move downwards and it breaks through, and then it's going to test the MA200, and if that MA200 fails, then that could be a bear market. Of course, it could always break to the upside as well, and then that would be a strong case for a bull market. So we haven't got there yet. That MA50 is not up there. But if we look at ARKK, this is starting to exhibit the behavior that I was talking about. It's chopping sideways. It's testing the MA50, actually crossed it a little bit, testing the MA50, because it's now so close that the daily fluctuations regularly go right to it or through it. And then it's been staying on top so far. But as we do this more and more, then we're going to be watching very carefully. Does it break up or does it break down? And here we do have more distance between the current price and the MA200. So the chances of it breaking through and just going into total bear market for ARKK is a lot less likely. So that's but if we start seeing this in the S&P 500, then we want to start getting very, very cautious. And we're kind of close. If we do break out of this box and start drifting higher again, though, then we push that off, because at this point, the slope of the MA50 and the EMA8 and the EMA20 are all very similar. So as we go along, if they just parallel each other, then what we're doing is we're kicking down that eventuality down the road. So instead of being in the next 1 or 2 weeks, it would be in the next 1 or 2 months before we would start seeing that consolidation where it crosses the MA50 over and over again. That's a great visual of what we want to see or what we'll want to look out for. We don't necessarily want to see it. We want to be careful of when it does happen. ARKK is exhibiting that right now. So even though IWM is looking good, ARKK is giving me a little bit of pause. And then if we look at the Dow Jones, that Dow Jones is similar. The EMA8, EMA20, MA50 are all pretty much moving in the same slope right now. So at some point in time, it's just very slowly drifting upwards. And at some point in time, if it stops drifting upwards and starts consolidating, it'll very quickly go into a situation where those MAs or moving averages are paralleled or going sideways also, and we're crossing them over and over again, which puts us in somewhat of a danger territory. Okay. What are some stocks or sectors you will rotate in for longer traders in the bear? Longer term traders in the bear. If we switch to bear market, the first place is flight to safety. If it goes into a true bear market, then everything's going down, and I wouldn't necessarily be parking cash in that situation. I'd be taking advantage to the downside. So it just depends on which stage of the bear, but the initial stages are usually flight to safety. We didn't get that chance in COVID, for example. We didn't get a chance for a flight to safety. We just went down and everything went down. That was a high correlation. Basically, in an extreme bear market, then all correlation goes to 100. It doesn't matter how diversified you are. It doesn't matter if you're in oil, if you're in stocks, if you're in houses, in real estate, if you're in gold, if you're in crypto, it didn't matter what you're in. When COVID hit, everything went down all at the same time. So there's not going to be a safe haven. And the only thing that you can do is either stay in cash or you go short. You find some great opportunities to short. So that would be my plan. If we see the choppy sideways curl over, that's a time for flight to safety. And then when we start breaking down below the MA200, that is a time to start looking for short opportunities. So if we look over here, this is COVID. Okay, basically we didn't get that period that I showed you where everything chopped sideways and we crossed through the moving averages and chopped sideways. We're above the EMA 8, we're above the EMA 20, we're above the MA 50. Everything's perfectly aligned, and then boom, when one day we cross all the way down to below the MA 90, and then the second day, boom, we're below the MA 200, and then third day we just keep on going down. We recover almost to the MA 200, and then we keep on going down. So there's no safety over here. If it happens like this, there's zero safety. If it happens the way more like it normally happens, okay, so over here, it came down. We didn't get that consolidation across the EMA 8, 20, and 50. This came down a little aggressively, but it did chop back and forth, right? It chopped back and forth across the MA 200, the MA 90, and the EMA 8 and the EMA 20. And the MA 50 acted as a ceiling. So in any case, most of the time when we hit these bear markets, you will have that consolidation period first. That's your flight to safety time. So over here, if we look at after COVID, so 2022, okay, same thing. Hit that MA 200, we're crossing all these moving averages, crossing all these moving averages, okay, and then we have that bear market. And then over here, crossing, touching that MA 50 a lot, and then we move down towards the MA 200. This time we kicked the can down the road, we avoided that, and we went higher, okay? But then we start to see it again right here, crossing, down to the MA 200, up tested back down. This one was very short-lived, and then that movement upwards, okay? Then over here again, crossing, especially this period right here, crossing the 90, the 50, the 8, the 20, and then coming down to the 200, crossing below it, retesting, crash downwards. Okay, so that was the most recent one. That was April. So if we start seeing that where we're crossing the MAs, especially that 50 or that 90, depending on where they are when it happens, that's going to be our signal that, hey, we got to be careful. We might test that 200, and if that 200 doesn't hold, then we'll go down. And so if we're talking about just the rotation, then those flight to safety assets are what we're looking at. We're looking at gold. Some people think that Bitcoin or cryptocurrencies, but the truth is the last several years, the correlation to the stock market has been very high. So in certain conditions, yeah, you could get a flight to safety out of equities into cryptos. But if it's really bad, then you're going to see money go out of cryptos as well before you see money leave things like gold or to a certain extent silver at this particular point in time. Silver tend to be more speculative than gold. Gold is a lot more stable because there's a lot less industrial uses for gold than there is for silver. So and then bonds also. If you start seeing bonds get really bid up, like yesterday we saw bonds really get bid up the last couple of days, that is a flight to safety as well. Although we can argue, are US bonds really all that safe? Well, they're safer than the stocks for now. Right, so people, if they're going to move it somewhere out of stocks, where can they move it to that provides enough liquidity where you can move cash really fast and get into something really quickly? They can't do it in real estate, right? That's not a 2-second transaction in real estate or anything else really, except for financial markets, the paper assets that are supported electronically. So not even every single bond, not even corporate paper or corporate bonds necessarily have that type of liquidity or speed of transaction, because you can't just go and say, hey, I want to buy a Ford bond, that's expiring in 10 years. How do I get that? Can I instantly transact it? The answer is no. But US treasuries you can, because they're so large and so liquid. So the TLT or US bonds will act as a flight to safety or safe haven in an emergency. And then once we're kind of, okay, we sort of dodged the bullet, this is not an ideal place to put my money either, then but at least I bought myself some time and I can figure out where I'm going to then move my money next. So you would see a shift into US Treasuries as well. Rasmir crypto, you see rotation very clearly at the end of a bull run from Bitcoin to Ethereum to more risky alts. Do you see this in stocks also? Yeah. You'll see it. You'll see rotations into high growth stocks. Well, the high growth stocks should be leading, and then you'll see the small cap stocks leading, and then you'll see the all taper off and then crash. Yeah. Doing well, Tristan. Good to see you. Thank you. Hope you're doing well too. Okay, so let's take a look at the sectors. You know what? Let's look at momentum. I haven't looked at that in a really long time. So let's take a look over here. We see that the number of stocks trading above their 50-day moving average is 57. Okay, that's middle of the road. Above their MA200, 63, middle of the road as well. Nothing super exciting about that right now. Look at bar chart. I want to see NASDAQ in particular. So 50 days, nothing really standing out except industrials, materials, and utilities. So there's a big divergence here. 50-day, 26%, 81% on 200. So that's a big divergence. This is not as big of a divergence on materials. That's kind of in line. So the major divergence we're seeing right here is utilities. Staples and energies are going to be kind of interesting to look at also. So let's look at those. XLP doing nothing. That's huge chop. That's doing absolutely nothing. That's pretty ugly. Energies caught a bid, pulled back to its MA200. We could see energies start to move. And if energies start to move, if oil gets expensive, that is recessionary. But it's not reflecting in oil yet. This is just overall energies. Okay, so nothing to be too concerned about yet. But I did see, I am in a BTU position. Looks like it's I was too early. I thought it'd break up over here, but it ended up breaking up, retesting MA200 again, and then surging upwards. I guess I should move this. Okay, and then what was the other one? I was like CLF, Cleveland Cliffs. That's looking like it could break out as well. And then solar. Yeah, solar's alternative energies. So it's not just oil, or it's not yet oil. Solar is looking like it's ready to start ripping. I mean, it basically already has for the last couple months, but this looks like it could go on a long term. Like this was a change of trend right here. This was the breaking of the downtrend when it crossed back above that MA200. That was a changing of trend. So if we look at things like First Solar, yeah, that's looking like it's ready to break up as well. Sunrun, yeah. So these solar related, let's take a look at Ura. How about nuclear? Maybe the nuclear stuff also. Consolidating, but it could move. Not SMR, NE, and not NNE. OKLO, not imminent. Well, I mean, I can't say that for certain, but it doesn't look imminent to me. But this could start moving. This could, and what we did get here is, what I love to talk about in the post market, which is MA50 longer term trend. And those of you who have been watching should know by now, shorter term trend, as represented by the EMA8, is just barely turning upwards after today's bar. So this could be early entry into OKLO, nuclear stock. This could be the start of a short-term bull run, bull movement. Okay, maybe only as high as these highs over here, but if it's strong, then it breaks out, then that's a breakout move. Okay, and we are seeing stocks like First Solar do something similar. Okay, so right here, or you could say this bar or this bar, was the same situation that OKLO was in right now. There was another one. What was it? BE? BE that's not barely even pulling back. That's a really strong trend. That's a really strong trend. So it just keeps pulling back, not even to the EMA 20, just the EMA 8 keeps bouncing off that EMA 8. So BE is looking really strong also. So it's looking like some of these, not necessarily oil related energy stocks, are really starting to move. So that looks like an interesting sector. What was the other one? Utilities that we wanted to see. Utilities. So this one was interesting because we have only 26% of stocks trading above their MA50, but we have 81% above their MA200. So you see that the overall index is below its MA50 and above its MA200. So what I'd be interested in seeing in XLU are either the top performing ones, the ones that are still above their MA50, or ones that look like they're going to bounce off of their MA200. Let's see. Solar chart looks like STNG. Yeah, well, I gave you guys STNG a couple weeks ago, and it's been killing it, especially yesterday, just really gapped up. So I got an email from someone about it, how he did really, really well. He made it a couple 100%, I think, so far on this move on STNG. But yeah, STNG, the shipping stocks, they're looking pretty good here. Now, I drew this purple level for a reason, right? There's a pocket of liquidity right here. So we may get stuck at this 56 to 57 area for a little bit and consolidate. And then if the trend is strong, it can move up again over here to 66, call it 66.25-ish, 66 to 66 and a half, we'll call it that region, because stocks move from areas of liquidity to other areas of liquidity. They'll push right through areas where there's no liquidity. Why is that? Let's just say you buy and just say you see this and you want it and you say, hey, I want to buy, but no one wants to sell. That's an area, that's the definition of no liquidity at that area, right? It's a one-sided market. I want to buy, there's nobody to buy from. Okay, well, then price isn't going to stay there, is it? What's going to happen? If I still want to buy, well, then I have to say, okay, well, what about $60? And maybe I find one person to sell it to me at $60. So, but I still want to buy. Well, what about $62? Okay, barely anybody there either. So maybe I buy a little bit more at 62, and then the markets are still thin, no liquidity here. And then what about at 65? Okay, well, maybe I buy some more at 65 because I still want to buy, but still not too many people want to sell it to me at 65. And then I get to 66 and suddenly 200 people show up and say, okay, I'll sell it to you at 66. I'm not going to keep raising my price. I'm not going to try to buy it for 67, 68, or 69. I'm going to sit there and buy up all the 66s I can until they run out. And if I still want to buy, then I'm going to say, hey, anyone who want to sell me at 70? Anyone who wants to sell me at 71? and there's not going to be anybody there, and then a whole bunch of people will want to sell it to me at 75 again. So that is why prices move from what we call areas of liquidity or pockets of liquidity to other pockets of liquidity. They will just pass right through all other areas. And that's what this was showing you right here. At that MA 200, if we started our buy campaign right there, we went through all of this, and there was a baby pocket of liquidity right here. So we chopped sideways for a couple days, and we went straight through all these other levels. And then now we just hit another pocket of liquidity right here, depending on how wide, how deep that is. Okay, and it looks like this one is stronger. So this could be a little bit, it could cause us to pause for a little bit, but just depending on how deep that pocket of liquidity is, that will determine how long we chop at that level. And then we'll move right through these other areas where there's very little to no liquidity. And then we'll hit that 66, okay? Now it could go the other way too. We could eat up all the liquidity here, and then I go, oh, why did I buy all of that? You know, I feel stupid. I don't want to buy anymore. And then so now there's no more buyers, but there's still a bunch of people at 55 who say, what happened? I wanted to sell mine at 55 also. But I go, oh no, I'm stuffed, man. There's no way I can have any more. I overindulged. And they're, oh, well, I guess, I mean, I was kind of excited to sell at 55. I guess maybe I'll try at 54. Yeah, not that big of a deal to me. That $1 isn't that big of a deal. And so I sell at 54, and then someone else goes, maybe I'll take 54 also. Maybe I'll take, and then we just bring it all the way back down. Okay. So the pocket of liquidity, it will stay at that pocket of liquidity until either you run out of buyers or you run out of sellers. If you run out of sellers, then we're going up higher. If you run out of buyers, then we're going to go lower. If you still have buyers and sellers, then we're just going to keep on chopping sideways. That's how that works. I think that's a question that I get asked fairly often. So now you know what we mean by pockets of liquidity. And we identify pockets of liquidity because people showed up at that price before. Right? So you know that most likely people are going to show up at that price also. Again. Okay, NLR. There's been a lot of public hoo-ha over how AI build-out will strain the electric grid. Yeah, I mean, technologies do have to catch up with each other. Whether or not we've caught up at that point, or one gets ahead of itself and then needs to pause, and the other needs to catch up. Right, there's that can happen as well. So for now, the number one source of energy on the planet is still oil. And for developing countries, especially, if we're going to ramp up economies like, to a certain extent, China, but, like large country, the next largest country, India, right? If they're going to start building out their economy as well, then they're going to be sucking down a lot of oil. So for now, it's oil, but as we develop these new technologies and they get adopted more, I mean, how long has solar been around? And it still hasn't replaced oil. So it takes time. It takes a long time. Assume that's the catalyst for alternative energy stocks. Yeah, it could be. At least the future projection that alternative energy could eventually become not alternative. It could be the main source of energy. If we're projecting that, then yes, then the run could continue for a very long time. NLR is looking very good also. It looks like it is almost done, or may have just finished its consolidation period. So up, and then we found a bunch of price discovery in this area, in this box. Okay, basically, we found a fat, wide pocket of liquidity right here. And maybe we're going to break out of it. Maybe we're just at that top edge. Might be breaking out of it. What we do see is that, just to just, I mean, all it takes is a few basics. You can make it more complicated and you can throw in a lot more stuff. But if you can just master a few basics, then you can make money in the markets fairly easily. And then the rest is just candy on top, right? So here, that MA50, just the general movement of the MA50. Then we have the EMA8. You see how that EMA8 went sideways? And now in the last few days, now it's curling up. Now that EMA8 has broke above this horizontal line. So I'm not drawing this line for the price, I'm drawing it for the EMA8. I wonder if I can I hide that? Ah, like that. That's nice. Okay, so just look at that purple line. Can I hide that? No. So if you just look at that purple line, you see it went kind of to that blue line right there. Okay, then it went to it again, pulled back. So this whole, then it went to it again. This whole area is sideways chop in the EMA8. So it was up, generally up, sideways, and now it's breaking out of that horizontal line and going up. So that is a reversion, a change from the EMA8 going in a different direction than the main trend to now following it. So I would have identified it as right there, okay? Or the day after. Whereas you might say, Kane, if we look at the letter of the law of exactly what you say, actually, you could have caught it earlier and said that EMA8 curled up right here. And so you say, okay, this went down, then it went up. But for me, I would have looked at this entire region as a sideways chop rather than the 8 come down and then up. Why? Because it wasn't trending. Higher low, same high. Okay. So same high means that it went sideways. So then we have a lower low, same high. Okay. Same high means it chopped sideways. So that's why I would have identified this later than right here. This wouldn't be the exciting move into NLR right there. So let's see how that jives with the price action. Price. There we go. Okay, so if we did it right here, super early, yeah, actually you would have caught, this was a V-shaped recovery, you would have caught this movement upwards as well. But again, but then you might say, okay, well, I'll take my profits right here. And then right now, the last couple of days was an opportunity to get back in and catch the potential breakout move. So that was the mean reversion move. And then now we have an opportunity potentially for a breakout move. All of this needs to do is go above these highs, or today's high, basically. And that would be a breakout move. What's the difference between a gamma pocket and a liquidity pocket? Yeah, that's a good question. A liquidity pocket is where there's orders. So some institution or a whole bunch of retail traders, they are going to transact. They're going to put orders into the market. And they're going to say, hey, for example, if this breaks out, I'm going to put a buy stop right here and say, hey, if it breaks out, I'm going to buy in. And once I buy in, I'm going to put a stop loss. I have orders on the books, and those would be liquidity pockets. And there's hidden liquidity pockets in the sense that what I was showing you earlier on the previous chart. What was that? In any case, the previous chart where what I was showing you, those areas of liquidity, those are not necessarily on the books yet. It's just those orders would hit the books once the price gets to that level or near that level. A gamma pocket is something completely different. A gamma pocket is areas where options investors have placed their money and has forced the market maker into a position where they have a lot of exposure, they have a lot of risk. And so a gamma pocket is a place where the options market maker has a lot of risk and must hedge themselves. And in hedging themselves, they may, if they have enough exposure, then they could actually start pushing and moving the underlying price. So if I have a gamma pocket up here, what it means is that as we get closer to 130, the market maker will lose more and more money. And they can't do that. Their model is only to make money off the bid and the ask of the option. So they can't afford to lose all that money. So what they will do is they will start buying shares of the stock because as their option position that they sold loses money as this goes up. Why? Because the option buyer is making money on a call when it's going up. So that means the market maker is losing money as this price is going up. So what do? They buy the underlying stock because the underlying stock will make money as it's going up, and that'll offset their losses on the options that they sold up here. So now they're hedged. So they'll buy more and more and more shares as you get closer and closer to the gamma pocket in order to hedge themselves and make sure that they don't lose any money. And so they still make the premium. They'll break even on their shares and the option that they sold, but they will still make the premium on the bid ask. They'll still make the premium when you bought that option. You didn't buy it for par. You didn't say, hey, it's a 160 strike. I get to buy it for $0. No, you paid a premium on top of it. So your break even isn't I said 160, I should say 130. Your premium was like $5, right? So your break even is actually up here at 135. So even if it just hits 130, that market maker is still making that $5 and you're still out that $5. And so that market maker basically just says, okay, you know what? I'm going to hedge myself in a way where I'm still making that $5 no matter what. Okay, so that means that gamma pocket, if that market maker is buying up these shares and they have to buy a whole lot of them in order to hedge themselves, why? Because their risk exposure is really big at that level. Then what that means is the market maker's buying activity is creating a self-fulfilling prophecy. They're buying up a whole bunch of shares. That's driving price even higher, closer to 130, which means they got to buy even more shares in order to hedge themselves. And that drives the price even higher towards 130, which means they got to buy even more shares, so on and so forth until we actually hit 130. And suddenly they're perfectly hedged and they have no exposure. And now you don't have any more support for it to run upwards, right? And if it ran upwards, then they would have to buy shares towards the even higher price if they had exposure up there. If they had no exposure up there, then they're fine. They don't have to buy any more shares. They're perfect. They're golden. So the gamma pocket it depends on the market maker's hedging activity in order to help drive prices upwards. Whereas if we're talking about a liquidity pocket, then what we're saying is, hey, there was a bunch of liquidity right here. And if we move through that price, there's no liquidity here. So anyone who wants to keep on buying will have to keep raising their price until they find liquidity up here. Okay? So two different concepts that result in basically very similar looking phenomena on a price chart. Good question. Good question. You're welcome, Dan. So out of these stocks, what would you say is the best one to buy in for tomorrow? Well, I cannot give advice. I can give you my opinion, but don't take it as advice. Okay. Let's see. Which ones did we mention? We have NLR. That's looking good. So if this breaks out above that level, NLR is looking great. We looked at OKLO. And this would be an early entry. Looks good to me too. So let me index those two in my mind, and then we'll come back and compare. First Solar. First Solar, I would wait a little bit. I would wait for some confirmation. Run. I like First Solar better. TAN, which is just the ETF. We also looked at BE. BE is looking great. So far, BE, OKLO, and NLR. And then what others did we say? We looked at BTU. BTU might get stuck at this purple line for a little bit, so I would wait on BTU. We also looked at STNG. Again, might get stuck near here for a little while, so I'd wait until I saw it break out again. Did we mention any others? I think that's maybe one more, but I think that's about it. So far, BE, excellent. OKLO, very good. And NLR. NLR on a breakout. So NLR wouldn't be like, hey, put in your order right now. It would be like, watch this break above this level where it is right now. And if it does that, then that would be a go. So BE and OKLO. I would go with BE just because that trend is just so strong. So strong. BE is my favorite out of all the ones that we just mentioned. Okay, again, not advice, but just my opinion. I like BE the most. Okay, so how would you take advantage of BE? Again, not advice. How would I take advantage of BE? Well, that depends on what I want to do or what I'm looking for. Am I looking for maximum growth? Am I looking for maximum win rate? Am I like, how do I want to take advantage of this? So if I was super risky and I'm perfectly fine with risk, then I would count on this being a short term. Okay, so if we see it hits the EMA 8, 1, 2, 3, 4, goes up 3 or 4 days, comes back down to the EMA 8, 1, 2, 3, 4, 5, pulls back to the EMA 8, 1, 2, 3, 4, 5, 6, pulls back to EMA 1, 2, 3, 4, pulls back to the EMA 8. So I would count on 3 to 6 days, 3 to 7 days of upward movement. And that upward movement should get me above the previous high. So I could target in 2 to 3 days, maybe 4 days, I could target this high or a little bit above this high. So if I wanted to do that, a nice short-term trade, then I would obviously want a nice short-term expiration. And so I would choose something like maybe the monthly expiration because it's only 10 days away and there should be plenty of liquidity there. And well, there's only the 3 day, only this Friday before that. So this would be my best bet if I wanted just like a 3 or 4 day trade. I would be okay with the 10. And then I would seek the most liquid one. So at the money is not liquid enough for me, not for this price. And then this is 30. This was what, 35. This is 30. This is 50. This is 30. This is 30. Okay, so it looks like I'm going to be considering 54, 55, 56, 58. What happened there? 59. Okay, again, if I was my goal here is just to make the most amount of money and I don't care about the risk, then I would go further as far out the money as I could. But these are super illiquid, so I would go 58, 59. Okay, so it looks like out of all of these, my choice would be the 59. Okay, normally I'm not that risky though. I don't like taking huge amounts of risk. I like to have a more settled mind about it. So I would probably choose look at that, it's extrinsic value negative, which means it's probably not going to transact at the mid at 425. I'd be comfortable with 430, 4. Even at four, look at this. Even at $4.40, the ask, this is the strike plus $4.40. That's 59.40. 59.40. Okay. What that means is that for this to be worth anything at is that right? Oh, after it already moved after market. That's why. That's off. It's already almost $60. So no good. It already moved. It was so good that it's already looked. It's already above post market. It's already above the previous day high. So if we had seen this during market hours earlier today, this would have been a great move. And that option that I would have purchased at $4.40, it would be up quite at least 30, 40, at least 30 or 40% already. Unfortunately, I don't have time to look at another one, but I guess I picked a good one. BE post market is already looking very, very good. So there's a couple more minutes. Maybe I'll take a look at OKLO. Okay, looks like it moved a little bit post market, but not nearly as much as BE and was NLR. NLR hasn't moved at all, so it's perfectly the same price. So if I was to look at OKLO, I would want to get in if it breaks today's high. And again, I'll just quickly do that exercise, similar exercise. Depends on how long I want to hold it for. Okay, looks like if I wanted a super quick trade and I only target up to here, maybe to 80 or to 79 or 80. Okay, that could be a 2-3 day trade. So we go super short term. Okay, and if it doesn't hit my target within 2 or 3 days, I'm out because otherwise it's too risky. Then I could end up losing a huge amount of money for the small little gain that I was looking for. So we could just go right here again, look for liquidity, 20 cents, 20 cents, 20 cents, 15 cents, 15 cents, 15 cents. This one is only 14 cents, not worth it. So I would go over here at 15 cents. Remember, 15 cents is a smaller percentage of $4.50 than it is $4 or $3.50. So this is actually the cheaper one. And then my extrinsic value, yeah, $2.95. Yeah, I'll put this one. Again, not advice. Just you know what? Let's throw that into option strat just so we can track it. Long call, OKLO, 19th, 73 strike call. We'll save that. And the idea is let me write it into here. Okay. So max okay, we're just targeting maybe 79. Target 79. Okay. It could happen in just a couple of days, but to formalize it, I will look for ATRs. $79 is almost exactly one ATR away. Okay, so that fits my timeline of one ATR, which is 3 to 4 days, 4 trading days. Okay. So a couple things will happen, could happen. I could hit 79 tomorrow or anytime in the next 4 days, 4 trading days. And if it does, I close out at a profit. So let's say worst case scenario that it's 4 trading days. Okay, that would be 1, 2, 3, 4, Monday. Okay, so I don't want to take that weekend time decay. So I would say it has to hit my target by the 12th. Okay? And if it does, and it hits 79, then it's going to go to $3.45. Oops, $4.45. Okay. Then this one that presumably I can get in at about $4.45, then this one will be valued at $7. Okay. So my profit potential here is $7 divided by 4.45. Okay, so about 57% in 3 days. Not bad. And what I need to know then is, okay, well, that's my base case scenario. My best case scenario is tomorrow it hits it. Then I'll make money. I'll make more than 7. This will be priced at better than 7. I'll just say tomorrow. Let's just do it. Okay. See, it would be $7.35. Not hugely more, but more. Okay. But let's just say it takes all the way to 12th. Then I could sell this thing at $7. If we don't make it to 79, maybe we only make it to 77, let's just say. Okay, then it's okay. I've still made a little over a dollar on it. $5.48. We'll call that $5.50. Okay, and I made 23.6%. Now, if it goes down, if I'm wrong about this, and it goes down, okay, so how far down might it go? Well, it could hit today's low. Okay, so what if it goes to today's low? Today's low was not on this. Oh, high, low, 69.55. That's pretty low. I would not want it to go that low. Okay, so that's worse than a 1-to-1 reward risk ratio. So instead of doing it this way, let's just see how far we can go down and still be a 1-to-1 reward risk ratio, which means at 7.05, well, we just said $7 minus 4.45, that's $2.55. Okay, so minus the current $4.45. Okay, so $1.90 basically. So basically, I would not want this option that we chose to go below $1.90. Okay, so how far can price go down before this thing is priced at $1.90? Looking at the wrong price. So about $4, $1.85, so close enough. So a down $4. So basically, now I have all my levels. So minus $4 from where we are would be almost perfectly $70. Okay, so that would be my stop. And then my target is 79. And if it ends up somewhere in between 70 and 79, and it's not at either one or beyond either one of those by Friday, I just close out for whatever profit or loss that I have. Okay, so that's a complete plan that I showed you guys and showed you how I came up with it. Okay. Again, not advice and not even a recommendation. This is just me setting up a trade on a position that I kind of like. Okay. CLS and CRDO are both strong. I'm out of time, but I'll take a quick look. CLS, gap. So these gapped, and then now it's consolidating. Okay, so we want the consolidation to end, then either break up or break down. So that's a good example of, basically the same thing that happened with STNG today. Where's my ATR? There we go. Okay. So similar thing happened with STNG the last couple of days. And then CRDO. Yeah, this one's still going. You can't, no good entry here though. It's got to pull back before there's a good entry. TSA, maybe ask me tomorrow. I can't go into a full analysis right now. Looks like it broke out of consolidation though. So this could be moving higher. And we are the classic change of short-term trend to match the longer-term trend. So this is a clean breakout. This is looking pretty good. And is it smart to take BE just as a stock and not an option? If it opens at 60, I would wait for a pullback. How do you get GEX on the option quotes page? Which option quotes page? Normally you can't get GEX. It's something that you have to get software for. Right? It's not something that brokers just give you on their platform. Okay. All right, guys, that's going to be it for today. Went a little bit over time, but I just wanted to give you a complete idea since BE didn't work out for us. It already moved too quickly. All right. Thank you, Tim. Thank you. I'm glad that you got value out of the analysis. All right. Have a great rest of your night, everyone. And I'll see you all tomorrow. And if you have questions, shoot me an email. Or if you have suggestions, something that you want me to cover tomorrow in tomorrow's post-market, just shoot me an email and I'll be sure to do that. All right. Have a great rest of your evening, and I will see you guys tomorrow.